Remember, we got some positive numbers on Tuesday. We got the private payroll report today. What is Redfin saying about housing in 2024? What do I think 2024 will go down as, folks? This is the daily financial news for Wednesday, December 6th. Let's get into it. Alrighty, folks. So yesterday we got the JOLTS report, which significantly disappointed to the downside. From memory, I think 9.5 million openings was expected. We got 8.7. What happened after that? Rates, the 10-year fell. Up today, Wednesday, we got the ADP private payroll report. So let's review the numbers and let's see why the Fed is smiling again. So again, last month, the number was 106,000 jobs created. The estimate was actually 128,000, and we again came in low. We came in at 103,000. There's even more interesting data behind the top line. But the top line is important. What is happening with the ADP report is kind of step 2 of the Federal Reserve and Jerome Powell smiling. They are seeing inflation come in. They are seeing the job market soften, but not collapse. Now again, as I've said for a year, the job market is the last domino to fall, and fall it still might. But again, based on the data today, we've got number 2, but the big one is Friday. The big one is Friday, and I think I have the estimate here. Let me find it. Yes, Friday's job number is expected to be 187,000 jobs created. If the first 2 numbers of the week are any indication, we will come in below that. So today, I'm going to take the under of 187,000. I don't have any strong opinion on the number this time, but if it comes in light, it will be 3 for 3 readings that the Fed is winning and the job market is coming in. The job market is softening, but not collapsing, which is important. So some other numbers in the ADP report that I found were interesting. 1, for the last year and a half, leisure and hospitality have been the growth engine of jobs. This month, they were not only not the growth engine, they were actually negative. Leisure and hospitality were down 7,000. They were negative 7,000 jobs. As expected, the goods producers, the people making stuff, they were down 14,000. So where was the positive growth? Well, the 2 largest positive growth factors in ADP report were trade and transportation was up 55,000, and then education and health services were up 44,000. So again, folks, some job growth, less than expected. Also, it should be noted that wages, a big component of the ADP report, is showing softness. Not only wage growth for those employed at the same employer, but also what they call job switchers. If you leave job A and go to job B, that came in quite significantly. It was over 11%, and this reading was just over 8%. So even the job hoppers are seeing less of an uptick. So less job growth than expected, less wage growth than expected, aka the Fed is smiling again. Let's at least put some words around soft landing. I would say the path to soft landing has never been large, but I would say it's growing. So what does a soft landing look like? 1, we will have positive GDP growth Q1 through Q4 of next year. We will not have this is what a soft landing is. It is not my call, but I want to talk about a soft landing because, hey, it absolutely could happen. The Fed could thread the needle. They could get lucky, and it could happen. So step number 1 of a soft landing is positive, but below trend growth Q1, Q2, Q3, Q4. What is below trend growth? Anything below 2%. Anything really, let's say 2%, maybe 1.5%. So right around there. The second part of a soft landing is unemployment does not get out of control. Okay, great. What does that mean? I would peg unemployment not rising above 4.5%. You start getting above 4.8, that could start to be a problem. So between friends, let's say positive GDP growth 4 quarters, unemployment not going above 4.5. I think the last reading was 3.9. We will get a new reading on Friday. And then lastly, inflation. Inflation will have to continually drift lower, ultimately getting in the high 2s, ultimately getting to the mid 2s, and if we're lucky, get to the target of 2%. So that is what a soft landing is. It is not my call, but it is certainly becoming more and more likely. So I thought we should put some words and metrics behind it. Joseph Wang. Joseph Wang has been on this channel. He is called the Fed Guy. You can follow him on Twitter or X, FedGuy12. He was on Ken McElroy's channel the other day. I watched the video. Shout out Joseph, shout out Ken. Great discussion. The reason I wanted to bring it up here is Joseph Wang, who I respect immensely. His base case, 4 rate cuts, 4 in 2024. Now, how can that be? If we have a soft landing, how can you get 4 rate cuts? The key is the Fed will want to maintain the restrictive nature. Remember, in the soft landing case, inflation is going to drift lower. If the Fed does not cut, the Fed will get more restrictive. And if you are in an environment where GDP is trending below, below growth or below normal, you wouldn't want to be restrictive. So Joseph Wang's like, hey, if the Fed gets it right, you may get the Fed tinkering with the Fed rate and cut 4 times next year. Wow. That's without a recession. 4 without, heaven forbid we have a Q1, Q2 recession. The market might be right and we get 6 rate cuts. Again, these are not my calls, but I want to share with you what I'm seeing, what I'm reading, because I am wrong all the time and I want you to have the data. So shout out Joseph Wang, shout out Ken McElroy for an excellent video. So one of the things that I do want to call right now, I like to make calls early because I like to see if I'm right or wrong, is 2024 will be the year of mergers and acquisitions. I think, frankly, it's a layup. I think there are a lot of big, strong companies that are going to look to use their balance sheet to grow, i.e. McDonald's. I just saw a report that McDonald's is looking to open 9,000 stores in like the next 2 or 3 years. Part of that, I think, will be acquisitions. They'll be buying footprints of other weaker chains. It's the only thing I could imagine. But you will see more and more strong companies who don't need to borrow from institutions buy weaker rivals. In the tech space, you will see companies who didn't get their headcount and operations right sell for pennies on the dollar. This happened to one of the companies I was at in, I don't know, 2000, I forget, 4 or 5 maybe 6 or 7. We got sold for pennies. We missed the runway to go public and we got sold for parts. 2024 will be the year of mergers and acquisitions, in my opinion. It will be a record breaker, in my opinion. So we shall see. You can hold me to that. We'll look back in a year and see how I did. How about Redfin? Shout out Resi Club from Lance Lambert. Resi Club shared a discussion with Redfin CEO Glenn. And Redfin has a call on housing prices for 2024. Drum roll, please. They call a big fat 0. They think home prices will go up 0 in 2024. I don't know. I mean, there are so many variables right now. If Joseph Wang is right, rates go down 100 basis points. Maybe we get some compression in the margin between the 10-year and the 30-year. We could have rates in the 5s. I mean, what the heck happens to housing? Think about this. I mean, again, not my call, but I'm playing all the scenarios out. Let's say unemployment goes to 4.6. Inflation comes in. The 30-year mortgage rate is now 5.5% for the average, but if you have good credit, you buy points, you can get a 5% mortgage. Does anybody think the housing market does 0% next year? I don't know. It could be wild. Mortgage apps. More evidence, folks, that rates matter, rates matter, rates matter. What is going on in the mortgage space? Let me get the data. First, purchase applications. Purchase applications were down 0.3% week on week and down 17% year on year, right? Rates matter. Rates were 8%, then 7.5%. You would expect rates to be down. Aha. What about refi demand? Refi demand has been comatose for a long, long time. Well, week on week, refi demand is up 14%. Year on year, it is up 10%. So I ask you, if rates continue to drop like a feather, hopefully not like a stone, and we get sub 6, do we not think purchase apps will go up and refi apps? It certainly seems like we are headed that direction. So again, folks, we've got a lot going on. We have day 8 of our boot camp starting Saturday. If you were in the boot camp, you should have got an invite yesterday. We will go 8 to 10 with Millennial Mike. We will talk about out of area and out of state investing. If you want to hear from 15 millionaires and be a part of our celebration in Las Vegas, the event is sold out, but we have made it possible for you to join a Zoom. And I will do my best to make sure we take some of your questions during each session. You will also get access to the video after. I have to imagine watching 20 hours of content in videos from your computer would be tough. So you will get the video after. Also, I will be publishing the agenda. I am still moving the agenda around based on people's flight schedules, but I hope to have that finalized by the end of the week so you can make sure you are attending for the ones that you want to. So again, folks, 15 millionaires, live Q&As, you get the video after. It's a steal. It's only $99. I will put a link below. We did have to cap the space because that's just how Eventbrite works, but hopefully I will see you there. Come be a part of the celebration. 50,000 subs. We're actually over 55,000, so thank you to all 55,000 of you. And then, of course, we got a golden ticket, baby. Enrique, congratulations on getting your very first deal. The team is proud of you. Enrique, congratulations, folks. Get a golden ticket when you close your first deal. You can get a black card as many times as you close your next deal. We believe in doing the work. Remember yesterday, something I'm harping on, your W-2 is not a prison. It is a key to your financial future. Folks, have an amazing day. Do the work. Don't forget to buy the course, How to Get Started One Rental at a Time. The price will be going up. And also, when you buy it, join the Facebook group. You will love the thousands of other members there. Take care. Bye.